Good morning. It's Jeffrey Christian of CPM Group. I'm recording this around 11:20 in the morning on Monday, the 6th of January. We'll post it on the 7th of January, but I'm going to be tied up with a meeting tomorrow, so I'm doing this today. As I speak, gold's around 2,650 some odd dollars. Silver is trying to break above $31. It's up about 85.90 cents, just below $31 this morning. Platinum up about $10, and palladium's up around $20. Copper's also up. There seems to be some concern about inflation and expectations of stronger economy. I want to talk about silver today and the outlook for silver in 2025. In order to do that, we have to talk about the fundamentals and the economic environment. These are charts of silver prices, the big chart, since January of 2024. You can see that the price was rising very sharply, along with gold and other commodities from the end of March 2024 into the summertime, May, June. And then it sort of moved sideways. It did make another run up after August, primarily inflation concerns and economic concerns. It peaked in late October and came back down. It's basically been consolidating pretty much between $27, $28 on the low end and $32, $33 on the high end since the summertime. Our expectation is that prices will continue to consolidate in the short term with an upward bias. Longer term, we still expect silver prices to be significantly higher this year and next year too. We saw average silver prices rise about 20% last year. CPM Group is projecting another approximately 20% increase in silver prices over the course of 2025. And then prices somewhat higher into 2026 before they start to come off. That is predicated on a lot of economic and political factors. As I've said in previous videos and in our reports for the last 40 some odd years, it all comes down to investment demand. It is investment demand that drives the price of silver. Investment demand, in turn, is driven by a lot of macroeconomic and political and financial market and exogenous variables, variables other than the fundamentals of silver, other than the investment demand level. We saw investment demand rise sharply after 2005. It got up to 150, 200, it even got up to about 250 million ounces of net physical purchases in a given year during the global financial crisis and Great Recession. It came off. It got down to about 50 million ounces 2 years ago, 2023. Got up to about 70 million ounces in 2024, based on our preliminary estimates. And our expectation is that the economic environment may be volatile enough that we could see investors buy twice as much silver this year and next year as they did last year, around 150 million ounces. That's high enough, that's large enough investment demand to drive the silver price higher. It all comes down to investment demand at the end of the day, and investment demand, again, is driven by those factors. We're seeing the price consolidate right now. Our expectation is that we will see hostile economic, financial, and political conditions over the next 1 or 2 years, and that will cause investors to want to buy outsized amounts of silver. These are realistic estimates of investment demand, physical net purchases on an annual basis. You will find numbers that are much higher that do not stand up to statistical scrutiny, and that's where it is. Looking at silver investment demand a little bit more closely, we see ETF holdings around 1 billion ounces right now. They had gotten higher about 1,150,000,000 ounces. They came down in 2022 and 2023. They have risen back up more than 52 million ounces through November. Are pulling together December figures now for the precious metals advisory that we will publish for our clients later this week. But more than 52 million ounces of silver added to ETFs. It's a combination of long-term investors and shorter-term investors who were watching the silver price and saying, I want to be involved in silver. And the easiest and quickest way for me to build that long silver exposure is to buy ETF shares. So we've seen strong investment demand on the ETF side. That's been a little bit offset by lower Silver Eagle sales. Silver Eagle sales were off about 6%, 5.5%, 5.6% through November. Investors earlier in the year were focusing on medallions, not official coins, but medallions. They liked the lower premiums. After the price of silver rose in April, May, June, you started seeing investors selling. And there's been a lot of dissatisfaction on the part of investors trying to sell those medallions, finding that the premiums have disappeared. And in some cases, coin dealers are not even wanting to buy those medallions back, or they'll buy them at prices below spot silver. And that's something that we had warned about back in 2021, 2022, when investors started loading up on medallions. It's not the premium relative to the premium of an official coin or spot that's important when you're buying. It's what's important is what is the premium when you and everybody else wants to sell. And the premiums on those medallions tend to disappear when everybody wants to sell. Official coins tend to maintain their premiums somewhat. The premiums have come off over the last year or so for official coins, but they still are relatively better off than those for non-official coins or medallions, as we call them. Where we have seen additional demand is investors in the futures and options markets. And again, these are relatively easier positions for investors to take on. And we've seen a significant increase. On a net basis, we were in a situation in 2022, early 2023, where we had net negative investor positions for large institutional investors on the futures and options markets. There were more shorts than longs in the institutional investment side of the futures and options market. That's disappeared, and we now have net around 300, 320, 330 million ounces. We've seen a sharp increase in the gross longs, the yellow positions here, and we've seen a decline in the gross shorts. These are institutional investors. When investors want to go long silver futures and options, they have to find someone to sell those contracts to them. Those are market makers, also known as commercial entities in the futures markets. So people who don't understand that for investors to go long, commercials have to go short, get all upset when they see a large increase in the short positions on the COMEX, not realizing that those short positions, many of them, about 2/3 of them, are actually those market makers providing long positions to institutional investors. It's not that commercial companies, banks and trading companies and brokers are saying, I want to go short silver. It's they're saying, oh, my clients want to go long silver, which means I have to go short. I've spoken in recent videos about the uncertainties that are adrift in the world. It's uncertainty that drives investment demand. One form of uncertainty is inflation. Another is currency market volatility. Another one is economic volatility or financial market volatility or banking system instability or political problems, domestic, local, international. Those uncertainties, a wide range of them, drive investment demand. And we're seeing heightened uncertainty now and heightened concerns about where we're going economically and politically, not just in the United States, but on a global basis. And that uncertainty is heightened partly by the wavering of political leaders. We've seen, for example, even today, Mr. Trump, who is talking about 30% tariffs on everything coming from Canada, Mexico, and China, and tariffs here and tariffs there and tariffs everywhere. Today, he was making comments about being much more cautious about tariffs. So I'm going to put tariffs on every country in the world, but they'll be only on certain items and they'll vary depending on what it is. There's a tremendous amount of nonsense and wavering and unintelligent behavior. People talk in the incoming administration about cutting $2 trillion out of government spending. That would reduce U.S. GDP. It would throw us into a very deep recession on the order of 7 or 8%, just in of itself. It can't. It won't happen. You know that for a variety of reasons. First off, they don't have the power to do that. Second thing is that they're not that stupid. And the third thing is that if you look at the first Trump administration, there were tremendous numbers of promises during the election that went untouched in the ensuing 4 years of the Trump presidency. So there's a tremendous amount of uncertainty about what they'll try to do and what they'll succeed in doing and what they'll be able to succeed in doing and what other portions of the Congress and the government and the courts and the world will allow them get away with. And for want of a better words, nonsensical approach to the commentary just heightens that uncertainty. So you have it in tariffs, you have it in spending, you have it in the impact on the U.S. economy, on the global economy, and then you have other agents. You have the deterioration of democratic and elected governments around the world going on right now. You have the Russian invasion of Ukraine continuing, with Ukraine fighting back, Ukraine and Russia positioning themselves both for the last few weeks of the Biden administration and what comes next in after Mr. Trump is re-inaugurated. You have similar situation in the Middle East. Israel's Mr. Netanyahu was talking about something devastating that would come before Mr. Biden left office. He hasn't delivered in the last few weeks, but he still has 2 or 3 weeks to go. In the meantime, he's also said now that he's going to wait until after Mr. Trump has reassumed the presidency, and then he's going to get really nasty, as if he hasn't been really nasty already in terms of civil rights and human rights violations and violations of international codes of conduct. China, over the weekend, reasserted its belligerent approach toward reunifying Taiwan, saying that no one can stop it from reunifying Taiwan. China and the United States agreed in the 1970s that there ultimately would be a political, non-military reunification. It's been put off for about 40, 45 years. Chinese government's getting a little impatient. So those uncertainties are out there. CPM Group still projects a recession, possibly this year, possibly exacerbated by government behavior with the new administration in Congress. We have to wait and see, because what they say they're going to do and what they try to do and what they succeed in doing are 3 different subjects entirely. One uncertainty that is perhaps not that uncertain is that we will have massive U.S. government deficits as far as the eyes can see. The gray part are the nonpartisan Congressional Budget Office projections. We saw, we have seen the deficits rise sharply in the Reagan and George H. Bush era, in the George W. Bush era, in the Trump era. They have stayed high during the Obama era. They have stayed high in the Biden era. They've come off, but they're still staying high. $1.7 trillion last year for Mr. Biden's deficit. And the Congressional Budget Office says, regardless of who wins now, it's going to stay high. It's going to stay well over $1.5 trillion for the next 10 years. And if Trump does what he says he's going to do, the deficits could be maybe $2 or $3 trillion more than they have been projecting in this baseline. So that's true. And it's also true that deficit spending on the part of other governments around the world will continue to be very high, and that private sector, corporations and consumers also will continue to add debt to their portfolio, if you will, or their negative wealth balance, because these trends don't get turned around quickly, and they certainly don't get turned around with ill-conceived political efforts to turn them around. They could be turned around, but the political will's simply not there. Now, investment demand is projected to drive silver prices higher this year. As I said, our projection is average prices might rise another 20% this year. It's not because of solar power using silver. I'll show you a couple charts in a second. It's not because of military use of silver, and it's not because of a lack of supply. There are some issues in the New York market right now relating to shipping to ETFs and ETPs and silver supplies in the New York market. That relates to the fact that you ship silver on ocean and you fly gold in from London and elsewhere to meet demand. It's investment demand, and that depends on economic and political conditions. Solar power, we saw a very large increase in 2023 in the amount of silver being used in solar panels. About a third of those panels they were manufactured, but they didn't get sold and installed. So there's a massive overhang of unsold solar panels in 2024. We still saw an increase in silver use in solar panels last year, but it was much smaller than the sharp increase that we saw in 2023 because of those inventories. Going forward, CPM Group does expect silver use in solar panels to rise for the next 8 years. 10 years from now, we might start seeing a little bit of a decline depending on what economic conditions are. But right now, and for the next several years, we're looking at significant increases. Not to 800 million ounces, that's nonsensical, but perhaps to around 300 million ounces a year in silver use. Part of that silver use will be met by recycling solar panels. And there are people who will tell you that solar panels cannot and are not being recycled. But I can take you to see some of our clients and scrap refiners who are recycling solar panels and have been doing so for several years already. That silver can be recovered, and as solar panels enter their end-of-life use, they will be taken down, replaced with new, more efficient solar panels, and the silver will be recycled and reused, reducing the net amount of silver, newly refined silver from other sources of mine production or scrap that will be needed to meet the increased use in solar panels. These two charts are from the International Energy Agency, and they highlight the fact that you have enormous overcapacity in the solar panel manufacturing business. And we've seen the capacity utilization fall, It's fallen to around 50% now. They project that it's going to fall even further to around 40%. Interestingly enough, governments around the world want to have solar panel manufacturing capacity, but they're overlooking the fact that the components that go into those solar panels are primarily manufactured in China. So they're not actually getting rid of their exposure to being dependent on China in order to make solar panels. They're just going to have to buy the components and do the assembly themselves. And it's not military use. The military globally uses an estimated 50 million ounces a year. About half of that is used in the United States. We've talked about this in previous videos, and here are two, one from October of 2023 and one from December of 2023, where we discuss what is publicly available information about silver use in missiles and in other military applications. At the end of the day, silver prices depend on silver investment demand, and silver investment demand depends on economic and political conditions. Our assessment of what's going on in the world, what we economists call exogenous variables, tell us to anticipate that gold and silver prices will consolidate in the near term, the next couple weeks, with an upward bias, rising later in the year as the economic and political worlds unfold further. That said, wild things can happen in Washington and in the Ukraine and in Russia and around the world, and those could cause spikes at any time in the gold and silver investment demand and prices. Even today, something could happen. So that's where we're looking at. We're looking at higher silver prices later this year after this period of consolidation over the last 6 months continues for a few more weeks. We're still looking at a very hostile economic and political environment, which is going to cause investors, in our mind, to add significant amounts of gold and silver to their portfolios, perhaps doubling the amount of net silver purchases, physical silver purchases, this year compared to last year. That's all I have right now. We will have our yearbooks coming out in March, May, and July. We will have our PDAC Silver Facts and Fantasy online seminar at the end of February, our silver reception at the PDAC on Sunday, March 2nd, and a report that comes out in conjunction with that reception. And we are working on a silver seminar for later in the year in October, tentatively late October, tentatively Boston. Details will come as we develop them. You can go to our website. You can pre-order the 2025 yearbooks. You can order the 2024 yearbooks. You can buy other reports like our monthly precious metals advisory. You can become a retail investor program client. You can send us an email at info@cpmgroup.com and ask us to discuss with you ways that we can help you invest in and manage your exposure to precious metals and commodities, price volatility in a more efficient fashion. Thank you. Take care of yourself. Take care of those around you. Try to do something good for the world, because there are any number of people out there who are acting against our own best interests. Take care.